guys, welcome back to the channel. Today's episode is going to be about the portfolio. We've done some trades, we added some covered puts, we sold some cover calls, we day traded some premium as well. With that being said, we'll just hop into the markets and take a look what's transpiring today. And today has been a very interesting day. Over the weekend, the Fed has came out and said that they're going to release an emergency meeting. I'm not sure exactly what that meant. I tried to look for a source, try to find anything online, nothing solid. I'm not sure if the Fed spoke today or not. I am recording at 1 p.m. So maybe they speak later. I'm not exactly sure. But regardless, the market's having a great day today. S&P's up 2%. But again, these market rallies are not that impressive considering how much they have sold off within a week time period. So it's just a little slight recovery from Friday's lows. Not a major move, but it is decent enough to profit, and we did just do that. So the portfolio is actually having a good day. It's recovered $500 from yesterday's drop. We have a lot of premium here that we sold and made orders to. And it's just been a very interesting couple days, to be honest. It's very frustrating in some aspects, but also really fun to watch. Let's go hop right into Discord here and take a look exactly what plays we did and what you might have missed if you weren't online. Now, we did do a covered put on Fubo. We sold 3 contracts of these and we got $123 credit. It was a 40.41 cent fill. Now again, why did I do this? Well, it's just, having money that's sitting in the account. So it's not our money, it's the margin money, but it's just sitting there and it's not really doing anything and might as well get a return on it. So we basically tied up another $1,000 in margin, and in return we're going to get close to 11%. So we're borrowing money from the bank and we're selling cover puts on a stock name like Fubo, for example, in hopes that, if we do get a fill on Fubo, it's not that bad. We just flip it over and sell cover calls on it and just keep reducing our cost basis and creating another. So 100 shares is basically enough to sell insurance on, and it's like having tenants, right? We're renting out these contracts and we're playing with them and we're day trading them as well. So for example, we did a lot of plays in the past couple days. And that being said, we also sold beyond cover calls and I closed those today at 0.13. And we actually sold another set here. I tried to sell these for $1, but we got filled at 0.95. It was a big stretch, so the spreads are pretty wide. So anyways, I got the fill. It's great. You guys can take a little snapshot here. Roku still open. Fubo, that's the cover put that we closed, and Beyond, that's the new contracts we sold. And there is AMD as well. Now these stocks are pretty much all rallying up today. It's been a phenomenal move and the market's up over 2%. So you have stocks like Roku up 4%. You have Beyond almost up, where's Beyond? Yep, Beyond up 3% and AMD almost up 4%. So these are pretty big moves and that's why the portfolio is doing well. However, IV and Theta has crushed a lot of these contracts. So we're not really out of the game. We're not losing money here. So some of these contracts are above our asking price, but not a big deal. So for example, AMD might be a little bit negative here. We own these for like 98 cents. They're at 96, so a slight little positive profit here. Roku, we're doing very well on this. This is like a 70% gain so far in the contracts. Beyond, we just got into them. It takes time, but again, these do print. And actually, if you take a look at the overall performance that we've done, this is every single move I've done in this account so far. I am going to put this on a spreadsheet, but however, I do feel like in the early stages, like a software, just a basic layout, it's much easier to understand a lot of people. So these are our entry costs, what we actually paid for these stocks. AMD, Roku, Beyond, for example, and then for each stock, here's the list of plays we've done. So basically, we've done 3 plays on AMD so far. We sold 150, we closed at 0.60, we profit at 0.90. We did another one, we closed at 0.33, 67% profit here. And our most recent one, we did another play on AMD. This is currently still open. This is play right over here. But same thing with Roku. We did a whole bunch. And I still have these 68 calls open for 165. If you take a look here, Roku is at 0.68 roughly, right? This spread here. So again, these are all profit plays. We haven't lost any single one of them. And this is the total amount of plays premium that we've collected so far. And it comes out to right about $750 if you add all this up, which is fascinating, right? It's only been about 2 weeks, and considering we only have less than $5,000 at the moment, and we're borrowing money from the bank and we're generating revenue from that, it's just an amazing way to trade. It's very passive. It's not very aggressive. You don't have to sit here all day watching the stock market, looking at candles. Oh, look, SPY is going up. I should probably get calls, and then oh no, SPY is going down. I should probably sell these calls, and then no, I made a mistake. The the trend that most beginners follow is typically this is exactly what happens. This market's incredibly irrational. So if you use rational decisions to make rational investments, it ultimately comes and folds, and it just doesn't work. Unfortunately, the market is designed for long-term investors. But again, we can have fun as we're buying our favorite stocks and just keep trading our premiums. It's just such a great idea where, like, for example, right, we have currently 3 stocks, right, AMD, Roku, and Beyond. If these most likely will expire out of the money, which means that we're going to collect the Fubo contracts, which it's about $123 worth. So we can collect that and keep that investment. And if the contract, so if Fubo does break that $3.50 range and we do get the shares, it's great, it's fine. We'll just take that in and just sell cover calls and just keep reaccumulating premium on these. Eventually, the premium will outweigh the price of the stock and we will actually own these positions for free. Who doesn't want stock? I don't care any stock, whatever it is, give it to me for free, I'll take it, right? But anyways, guys, that's pretty much it. Again, what's pending this week, it's really unknown. I'm not sure exactly what's going to happen. The market could recover here. It could just bounce back down. Who knows? We can look at SPY. There's a lot of technical analysis I've seen on SPY. We can look at many indicators, but ultimately, none of that will tell us what's going to happen in the future. There's a lot of tensions going on with Russia. There's an oil crisis going on in Europe. The dollar is rising. All other currencies are falling. I mean, it's a recipe of disaster. So who the hell knows what's going to happen? But I don't really care. If the stock market does continue to go down, that's okay. We'll just buy more, make small deposits as that's going on. And when the stock market rises, we just sell our premiums and collect our revenue. Buy when the market goes down, sell off premium when the market goes up. It's kind of the philosophy I'm using to trading, and long term is actually compounds. Now, guys, if you guys have any questions, you can put a comment on the description, or you guys can go to our Instagram account at Sell the Dips. Very simple. Go in there. And if you guys want to see more about our product lines, or if you guys want to see exactly what we're about, you can also go to our website at sellthedips.com and check us out there as well. But that being said, guys, enjoy your week. It's going to be fun. Bring your helmets. Let's go.